Google versus Microsoft has kind of been a question a lot of investors have asked themselves throughout the years. Which is the better investment to take? It's a good question, and I want to show you which one Mohnish Pabrai chooses, but also, most importantly, why? Why does he choose this? So this was in his book, The Dundell Investor, which was originally published in 2007. He said, "It is an open question how the battle of Google versus Microsoft will finally play out. With over 60,000 employees, Microsoft is now, unfortunately, the bureaucracy it has always despised. If I were given just two investment choices of Google or Microsoft at present prices, it is a no-brainer decision for me. I'd pick Microsoft all day long. It is a battle between an innovator versus a cloner. Good cloners are great businesses. Innovation is a crapshoot, but cloning is for sure." And right now, if he had made this investment, which I don't think that he did, he would have been right, because Microsoft market cap is $2 trillion and Google's is 1.2 trillion. So I just want to explain a little bit more why he likes Microsoft above Google, because it is important. A lot of people have this question, which is the better investment? So the difference that Pabrai talks about between Microsoft and Google, or Alphabet, which is the formal name for Google, is Microsoft clone businesses, Google, they innovate. If we look at Microsoft's business model, so much of this has come from cloning other businesses and then just either doing it better than them or doing it similar and taking market share. If we look at gaming, which makes up 9.4% of their revenue, that comes from Xbox. Xbox, did they come up with that idea themselves? The idea of the gaming console? Of course they didn't. That came from PlayStation. The PlayStation came out in 1994, and then the original Xbox original, came out in 2001. Microsoft cloned the PlayStation gaming console by creating the Xbox. But it's not only this. Then you've got Microsoft Azure, their cloud computing platform, which makes up 24% of their revenue. Did Microsoft originally innovate the cloud computing business? No, they didn't. They copied this from Amazon. Amazon launched AWS, their cloud computing platform, in 2006, and then Microsoft saw the potential and launched Azure in 2010. They let Amazon do all of the innovation and come up with the good ideas, and then they just cloned. Even technically, Apple created the first operating system in 1984. They launched Mac System Software 1.0, and in 1985, Microsoft released Windows 1.0. Apple created the smartphone and the iPad, and Microsoft copied with their smartphone and their tablet. Microsoft is very much a copycat and a cloning business. They wait for a product or service to do well, they let other companies innovate, and then they come in and they take away market share, they take away money, they make money from their idea. And you compare this to a company like Google, Alphabet, they're not cloners, they are innovators, they're more innovators. Google innovated Google Maps, Google Chromebooks, Google Assistants. They're looking to innovate and create self-driving cars with their company Waymo. They think of ideas and they try to innovate them and make them into a product and form a business model. Microsoft waits for other companies to create successful ideas and then they copy their product. It's cheeky, but it's actually a really smart way of doing things. It's kind of like Mohnish Pabrai's investing style. He waits for really smart investors to come up, create, and find a good idea, find a good investment, and then he'll just come along and he'll clone it and copy their investment. It is a very smart way of doing things. I don't know why more people don't do it. And if you look at Microsoft, what they are trying to do now, they are trying to copy Google's main business, which is Google Search. So Satya Nadella saw how lucrative the search engine was for Google, the high margins that they had, and the low cost, the low amount of work that they have to do to get so much money, and he wanted to clone this idea. He's looking to take market share away from Google with Bing by incorporating AI into their search engine.
Search was the most profitable category there is on planet Earth. So therefore, all I need is a few more users, and someone else that I'm competing in has to keep all of their users and all of their gross margin. I'm looking forward to that.
So no plans to charge for new Bing. It's really advertising model all the way through.
We'll start there, and if there are other models, there may be other models. But there is enough surplus. Let me put it this way. There is so much surplus that goes to one place, which I think would be nice if it was evenly distributed.
And that surplus that he's talking about is Google taking basically all of the money from the search engine business. And Microsoft, because they're a cloner business, they want to take some of this money. So Pabrai prefers cloning above innovating because with cloning, the business model has already been proven that it works and that it makes money. Microsoft had proof already that the gaming console would work because PlayStation had already created it and they were making money from it. PlayStation did the hard work, Microsoft copied. Amazon proved that cloud computing and web services would work and that it was a profitable and lucrative idea, and Microsoft very smartly copied. Innovation is hard and it takes a lot of work, and it often doesn't work, and you're spending a lot of money to try and create and innovate these ideas, whereas cloning is way less work. All you have to do is copy the idea, and if you do it smartly and put money into it, the chances of it working are actually pretty decent, as can be shown with Microsoft and how many ideas they've cloned and successfully made money from. As Pabrai says, innovation is a crapshoot, but cloning is for sure. Now, does this necessarily mean, well, let's go out and buy Microsoft stock? Not 100%, because you have to ask yourself the age-old question that every value investor must ask themselves: are they worth their price tag? Yes, they are genius cloners, Microsoft are, but they are selling for a decent price. Microsoft have a market cap of $2 trillion and a PE ratio of 29.6. Google have a market cap lower of 1.3 trillion and a PE lower of 22. So basically, for every dollar earned with Microsoft, you have to pay a price of $30. And for every dollar earned with Google stock, you have to pay a price of $22 right now. Google is cheaper relative to profit earned, but some may say they are a worse business model. Some very smart people like Pabrai. And if you think along the lines of Pabrai, which I personally do, I do agree with him on this subject. If you do too, you need to ask yourself this: am I willing to pay an extra 36% in terms of price compared to earnings? Am I willing to pay that extra amount in order to buy a better business? I can't answer that question for you. That's up to you to work out. Guys, if you want to see my portfolio, please sign up to the Investing Academy. And also, you should go see www.buffettinvestors.com because it's free. It's free for anyone to go on and check it out. There's an intrinsic value calculator on it, so you can actually learn to calculate the true intrinsic value of stocks and separate the intrinsic value from the price. So I'll leave the link to the descriptions in that below. Thanks for watching. Google versus Microsoft? It's a good question.